Good morning, Predicted Trades family. Hope everybody is doing well. Sorry, I was just dropping links everywhere so that folks can get into prep. Drop one last little link. Okie doke, let's dig on in here. We will start with ES. Good morning, Chris. Nice to see you. Hopefully everyone can hear my voice, see my screen. No problem. And let's dig right into a little review of the week and thesis for today. If you haven't tuned into prep this week, I always suggest going back to a rewatch. We basically followed this trend line up on the market, called it out all week. It provided great opportunity for longs off of it, shorts back to it after tagging key things like the daily 8. The cyan line is the daily 8 moving average. So, we ran into that, pushed us back to the trend line, and it keeps grinding tighter and tighter. It got above the daily 8, used it for support, just to tag the daily 15. Then we had the roll over, the rug pull, after breaking that key support. And we went back below Monday's range, even the previous Monday's range. If you can see, we've kind of just been stuck here, right? In between this 39.60 and that 40.56. So we tore straight through that in the rug pull, right back to the lows that brought us up. And we have the same kind of bounce and trend line that we're dealing with. As we zoom into today, come on, there we go. We basically have a key zone made off of these two price levels. We have another key zone down below as our support. The same low that sent us back up from the previous Thursday, plus a slightly lower target. This 38.55 is low of year, so we've got a nice bounce off of it. Yesterday was some annoying price action, but overall acted like we wanted to keep going up and not going lower. Got our nice gap up. Some of us swung some calls, so those will be looking nice around open. I was kind of hoping that this gap up would have been enough to start opening up these squeeze clouds. But unfortunately, they are still intact. So we definitely have some resistance above that we would need to get through, and especially this zone that we would need to get through, pull back and hold as support to get through the daily 8 and a Keltner that are kind of overlapping each other right now. And back up into this zone that kind of represented the range of the week, the range of Monday at least. Now, scenario, if we cannot get through this zone and this squeeze top, which we have seen many times when we open at a squeeze top, it's a great spot to roll over. So, if we start to reject this zone, give up our support, we could easily revisit some of these lows. And this daily Keltner down below, which is right in the middle of this squeeze cloud. We have a 30-minute, 1 hour, 2 hour squeeze. Those are all kind of stacked together. I didn't want to edit. Stop. Come on, Toss. Wow, complete freeze. There we go. So overall, let's see if the trend line can give us enough energy to get through these squeeze tops. We can get through them even when they are a little thick like this. Pull back for some support and keep trucking. It can be a little bit of a slow grind when they are in place like that. But they aren't, we've seen, come on. We've seen much thicker clouds where we definitely do not get through. And we have to grind against them to get them to open up. Even when they're opening, you see it can be a battle to push them all the way open. So actually, let's just zoom in because this is kind of similar. We're running into these pre-market. We can get a rejection back to support. As we try to get through them, they open up, but they're still there providing resistance. So that's kind of what we're looking at today. We have them as resistance. To get through them, it's going to take energy pushing against them. There will be pullbacks. Should this trend line give out, we'll be going back to revisit at least the bottom of this 30-minute squeeze and the overnight low, down to this 1-hour squeeze and some of yesterday's lows, or all the way down to this 2-hour squeeze, daily Keltner, low of year. So definitely be ready for both scenarios. We could also just kind of chop around in these levels, not really going lower, not really going higher. It is OPEX Friday. Everything today expires. So be ready for, even sideways action on an OPEX Friday. Let's look at tech within Q. Basically, same thing. Got a nice trend line. It's providing support as we run into these squeeze tops. But just like any drop, you can get a drop, slight raise higher, just for the next leg lower. And we still have third Keltner further down for most things, if we take out low of year. So, kind of the same scenario. Let's see if tech wants to lead. They are up. They are leading right now as far as the indexes go. So, let's see if tech wants to keep leading. A big part of that will be Apple, which we'll get to. The Ruddy already back above the daily 8, with the daily 15 and the daily 21 within reach today. So Ruddy might be a good indicator if it can get above the daily 15, this 1810. That could be a good sign that the market does want to try to push higher to recover for OPEX. If it rejects that 1810 or rolls back over and loses that daily 8, could also be a very great gauge that we are going to go back down to revisit some of these lows. So definitely keep an eye on this tight little range, which only spans about 20 points on the Ruddy. It can kind of react first as far as the indexes go. YM definitely has been the weaker of the indices. It fell through last week's low, setting a new low of year. It did at least bottom and come back up with everything. We kind of do need YM to at least stop being so weak, because it is dragging us. Basically at least hold above this 31,400. If we zoom in here, there we go. That's kind of the trend line following up. 31,400 would represent kind of losing that trend line. So want to see that key level hold for YM. At the most, it can slip down to this 300 and squeeze, 30-minute squeeze bottom. for a bounce, but needs to get back above that trend line in, about the first hour, hour and a half maybe. Any extended time below that 400 will probably roll back. So nice little range on YM to watch today as well. Before I go through individual names, I'm going to jump to VIX because we are at key levels on VIX, which are going to be a great gauge for today. After last week, where we had that little grind up in the market and then the sell-off and the lows of last week, VIX was just bouncing around between 30 and 35, right? Once it loses 30, Friday, that allowed us to move higher. And again on Monday, stayed below 30, allowed us to move higher. Where's the journey probably going to turn around on VIX? At 25. So 20, 25, 30, 35, very key levels on VIX. When we get to 25, we can see reversals, and that's when we got our rug pull on Wednesday, right? When the market sold off. It got pretty close to 35, kind of setting in a lower high from this consolidation and under our key 33.52. That's kind of a key level for me to know that we are going, if once we break above this and keep moving, we are in true sell-off and there's very little buying sentiment. We have stayed below that in this drop, and we got right back below 30 yesterday. Even though the action was kind of sideways and dramatic, we did kind of move higher on everything, and VIX, confirmed that higher sentiment by dropping under 30 and even rejecting it near the end of the day. We got a gap down, and we are below my key levels at that kind of center around 29. Sorry. There you can see those levels. They center around 29. They are kind of key. We also have the daily 21 cutting right through here. The daily 8 right above. So a nice little zone here on VIX that is going to be very key today. Pre-market, overnight, it has stayed below this zone. For the market to move higher on this little gap up, well, decent gap up, sorry. For the market to move higher, we have to stay below this 28.79, 29, and daily 8. Little zone in here, right? Once we are breaking above all that, we're on a mission to go test 30. We could get through. The market is rolling, probably breaking its trend line from the lows. If we can stay under this zone and head back down to like the daily 50, which is kind of where we turned around. I've talked about on moving averages. This purple one is a daily 50. I've talked about, we can get through them. They need to continue to support or resist. And once we break back through them, be ready for reversal, right? So now we're back under the 21. We need to keep resisting it. The 21 being this white stair-steppy line. We need to keep resisting it. Once we break above that, break back above the daily 8, we are going to see some selling off. We are going to revisit the lows from yesterday and the week. But as long as we can stay below these levels, we can continue upside. We do have a big old daily squeeze setting in on VIX because of this action where we have been going from 35 to 25 to 35 to 25. So now we have a big daily squeeze. And where's it settling in? 35, 25. So get ready for VIX to be in these zones for a while, for the next few weeks. And get ready for, any further up or down is going to be mixed with plenty of reversals. So that's why I wanted to jump to VIX. Big key level, just like we talked about over on each index. At a key level, it needs to stay above to keep moving higher. Once it gives out, we'll go lower. Same thing on VIX here. Need to stay below this and go lower for the market to head higher. Also, if the market just chops today, VIX can grind lower, even on sideways action. Definitely watch around this 28, this zone, because on that rug pull, that's where we gapped to. It became the support that we took off from. We're about to revisit it. Can get a bounce there that sends us up through these moving averages. So, key levels to watch on VIX. And we'll dig into the each name. Let's see, Apple. Apple has been kind of weak. What does it mean when something is weak? Because if you're new and you haven't been watching these preps, let's show you a comparison. Apple has been back below last week's lows. It has all of its daily moving averages way above. And it's hovering around this zone, right? If we go look at AMD, it is above all of its moving averages. Here, let me clear out this drawing set. Boom. It is above all of its moving averages, nowhere near last week's lows, pushing it against the top of a daily squeeze, and it's back at its daily 50. So this is something that has been showing relative strength and trying to send us higher in chips and AMD. Apple has not been doing the same. We need Apple to stay above this 138 zone that allowed us to bounce last week. This 138.79 is a previous all-time high for Apple. Clearly we've been above that, but I like to leave them because they can provide support. It was something that we couldn't break through, and then broke through, being an all-time high. Now that we are back to it, this should be support. And as you can see on Apple today, very tight squeeze with this zone being the center focus point. So we need Apple to stay above this squeeze bottom, use it as support, get through the squeeze top, but being that it's already to a red, meaning mid compression, we can just stay inside this all day, lending to the chop scenario. But ultimately need Apple to start showing some strength to help the market go higher. We also need that because AMD is at the top of this daily squeeze. It needs support in tech to keep going and pushing against that daily squeeze and getting above highs. Recent highs, right? Watch this wedge. Because if something that has been leading, got pulled back with the market, is in a wedge and it loses it, after being a leader, it can kind of add fuel to the downside. We have some leaders trying to help us head higher. If they give out, it's, the weak stuff is not going to just all of a sudden step in. We're probably just going to head lower. So watch this wedge on AMD. And, these 100 calls have provided opportunity all week, each day. Obviously not the rug pull day, but yesterday they were amazing. Yet again off beast. So definitely keep an eye on those. Should we give out that trend line, probably going to revisit that low around 96. So yeah, AMD has been strong. Plenty of opportunity all week. Amazon. Stayed above last week's lows, but still kind of weak. Rejected its daily moving averages. Tight squeeze setting in on Amazon today. but kind of starting to open up from mid-compression. So can get going today. Amazon was pretty strong in the morning yesterday while the market was chopping around. Amazon just shot up and stayed up. So let's see if Amazon has an interesting day. We do have only 2 weeks left until the Amazon split on June 6th, right? That's Monday. We only have one full week and I believe, right, one shortened week before that Monday. I have to imagine that big money is going to run Amazon up. I would imagine it, or yeah, I feel like it should run up into that split. Obviously, big money's going to do what they're going to do, and market's going to do what it's going to do. But we could see a nice turnaround for Amazon, which has been getting beat up. Cat back at that 200. I've said 200 is very key. Looks like it slapped its daily 200 moving average, this yellow line. Fell almost to that 200 level and then ramped right back up all day. Tons of great opportunity in a chart like that on a name like Cat. We are rejecting the daily 200 already this morning, which we rejected at open and couldn't stay above. Let's see if Cat can base around this 204, maybe the squeeze bottom. If we get that low, it would set in a higher low that might allow Cat to get through its daily 200, daily 8 up to the squeeze top. But we do have a lot of liquidity here. All of these moving averages all stacked together. It's not surprising that we swing past them to tap the daily 50, then swing back through them to find support at recent lows. So now we could swing back through them again or just settle in them. But kind of upside downside targets on Cat. 200 should hold, especially with the daily squeeze. Yeah. Facebook. It's at a top of a gap fill from an earnings gap up. The last earnings on Facebook, it gapped up, and this shaded region kind of represents that gap. We have slipped into it a little bit at those lows of last week, but shot right back out of it, and it has been support. On the rug pull, we did slip into it, but yesterday it really tried to fight out of it. Now we're gapping back above it. It stops basically at about 193. So should Facebook hold 193? And I'm going to zoom in here because I can see this a little better. Should Facebook hold 193, it would also be holding that trend bottom. And it can get up through this 195 on squeezes that are opening, and getting thinner. So Facebook could try to lead today off of 193 tap, getting through 195.32, and the daily 8. It might allow this squeeze to fire to the upside. Closed at 191 with a 10-point ATR. We can get to the mean today if we really want to on Facebook. Just depends if buyers are going to step in. It has been, relative strength compared to everything. It's right by its moving averages, and it got above the daily 21 in an attempt to get to that daily 50. So relative strength-wise, it's looking decent, not as good as AMD, but not as bad as Apple. So we'll see if there's some rotation in to Google, or to Facebook. Google, not as strong, I would say. Did not get to its daily mean, the 21. Basically held last week's lows, but we saw a lot of names yesterday that ramped and stayed up there or dropped and then got back up. Google got up and then went and set new lows. So not the best relative strength, but Could provide opportunity if it takes a little dip to retest those lows, as long as market is moving up and not breaking those trend lines to the downside. Google could play a fun little catch up and get back to its moving averages. It likes to do that sometimes on a Friday, so I'll be keeping an eye on it. As long as it, holds what a double bottom might look like, kind of around this 22.10 in that trend line. It is gapping up a good amount. I expect a little dip. Definitely want it to stay above that 22.10, maybe even 22.20. And it could get back to the daily 8 today. So definitely on my radar, but just not loving the way it's been moving lately. GS, banks, pretty strong yesterday. Support. And not even that hard of a rug pull on them. In fact, GS was starting to fire, I would assume, a 4-hour. Yep, to the upside. A lot of times when these squeezes start to fire, you get a little reversal, then it starts going again. But overall, relative strength did not get hurt so bad in the rug pull, and already kind of back up into those ranges above those lows, gapping up almost to the highs of that rug pull. So right by the daily 21, and it looks like we have a number of squeezes in place on GS, but they are kind of spread out, so we do have some room. So let's see if GS wants to lead, get over the daily 21 back to 314, 315. That would spell a nice move up for YM and the market. JPM. Not a big interest for me. I keep saying, I'm going to play GS. It always seems to look stronger, and we are seeing that as this has kind of pulled down and barely gapping with a tight squeeze. So JPM not a huge focus today. GS can move more, I feel like. Microsoft. Again, kind of like Facebook, it's not looking the strongest, but it's not looking the weakest. And in a way, if we keep holding this lows, we're in a channel from those lows and these lows. So we can move up, fall back over the next week. But overall, Microsoft needs to get north of 260, 265. That will really spell some more upside in the market. We do have the daily 21 pulling up on this 270. Let's see if obviously if Microsoft starts falling below 255, we're probably rolling over in the market, and it's going to revisit that 252, 250 area. Netflix. Ooh, pretty strong day for Netflix yesterday. So, when we're seeing the market chop, here's a big key point. Look around at individual names. Sometimes there's opportunity in those. They can move on their own while market is chopping, right? Tech gets a pump, then YM gets a dump. And it's all this rotation that's going on intraday that makes the market appear choppy when actually individual names are pushing up, taking a break, pushing up more, taking a break. And, not as whipsaw as the market. So Netflix, pretty strong day. Back to the daily 8 and 15, above those and trying to use some support. So let's see if it can stay above that 183, or 184 actually, and 185 zone. Squeezes opening up, pretty much all open on Netflix. So as long as we can stay above 140, 184, 185, we can keep going higher. If we give out 184 and this overnight low, we're probably coming back to revisit 180. NVIDIA. Pretty decent day yesterday. Doesn't look quite like AMD, right? AMD up over a lot of its moving averages. NVIDIA keeps rejecting. But it is back above the daily 8. Let's see if it can use that as a springboard. Let's see if there's going to be any little gap fill. But getting back above the daily 8 would be nice and bullish to head back up to try to test the daily 15 and daily 21. Closed at around 171, 12-point ATR. You know, can almost get back to the 21 today, but be cognizant of the uptrend. Should it start to give out, it can easily just come right back down. And already starting to slip it. So definitely watch individual names with these uptrends from overnight. Sorry, I'm just jumping around to see if anything else. No, just NVIDIA right now is starting to slip it a little bit. QQQ. Oh, fun. One of those candles on QQQ. Great. Same thing. Draw your trend lines from your lows. I'll just go ahead and snag one here while we're looking at it. I can see this wick right here. Yeah, already starting to slip through with an annoying wick down to 92, and that little squeeze bottom going to be kind of key at open on QQQ. Need to hold 291.5 up to 292 little zone. Should that give out, we'll be firing that 30-minute squeeze down, going to tap 290 and this wick down at this squeeze bottom. Roku. I mean, you know, a decent day yesterday, but look at Roku this week. Just pinned, basically, between 100, 98, and 92. It's just moving back and forth between those levels. Starting to try to gap with a bunch of squeezes in its way to get through these highs. I could even see it probably taking out those highs and reaching into the squeeze top, but it will probably roll back. So, not a huge interest today, except that it's opening in these squeeze tops. It could be a good short if market is weak. Shop. Insanely strong day yesterday, and really not even that badly sold off when the market slipped, right? So in a way, some relative strength here in Shop getting back above its means near the daily 21. Shop also has a split, but it's later in June, the 28th. So it has a catalyst to head higher with that split. It's got a little squeeze at 410, 390. So keep an eye on that. But could easily get through it, that 410, hit that 420 daily 21. And the next Keltner is up at 460. Closing at 390, 50-point ATR. That's a little bit out of reach. But yeah, let's see if Shop gets the 21 and rejects. Could set up a great short to get back down to 360. SPX. With the gap up 34 points or so. Kind of going to be opening in between these levels. And below yesterday's high, most likely. Let's see if SPX quickly jumps up to 39.50, gets above it and takes off, or if that is resistance that makes it roll over first to fill the gap. We do have a gap up above if SPX can get going today. But we clearly need to get above 4,000, and we're not going to be opening above it, so we will keep an eye definitely on these squeezes. I know it looks a little weird, we don't have free market data, but when SPX open, it will probably be right at these squeeze tops, which could provide a short, but we'll just have to see, and we'll be using ES and SPY as the gauge. SPY. Not the cleanest trend. And as we all know from watching and trading it yesterday, it was kind of all over the place, up and down with all that rotation. Let's see if that trend line can hold us up before and at open to send us up to test this 395. If we can pop and hit these squeeze tops first, I'm sure some puts are going to land their beast to play it back. Should this trend line break, going back to 390. These squeeze bottoms 388. Should that give out low of year, and final squeeze bottom, they was a 2 hour down there. So not loving the SPYs and Qs have these tight squeezes that are kind of thick. We could just kind of stay in this range today. So definitely have up those 390s, maybe 388s. Definitely have up the 395s, 398s, 400s to play, you know, getting up to these squeeze tops and through if we can, or rejecting and falling back. Square, little darling, is, you know, trying to be pretty strong. On Wednesday, it was trying to lead, and when the market rolled over, it kind of just went back to not even lows for the week and fought right back up to new highs. Square looks pretty poised to try to break on out. Butting up on 90 after getting below it. Kind of the first time we've been at these price levels since last Tuesday. So let's see if what used to be resistance, now that we are kind of there and testing it, if we can get above it, stay above 90 and take off. Daily mean right above it, that 93.5, psychological 95. Square still has a 10-point ATR and closed around 87, so can get back to 97.5 today. I like this setup. Square looks like it's poised to break out, and all those squeezes have been cleared. This is what I was hoping for on the market, like it gap up enough that those squeezes start to clear out and we can just go. So I like Square upside today, but if market is weak, it can play a quick catch up down to 80 and lows of week, right? Tesla. Tesla. Already kind of starting to give up trend line from the lows. Fall back to 715, back below our key. 718. Held us up earlier, but the squeeze top sends us back. Basically filling that little gap up from the overnight. And watch where it closed around, around 709, 710. Should this continue into open, want to see that 710 hold, 705 maybe from this low wick. Below that, we're probably going to revisit this 695, 690 zone. Need Tesla to get back above 718 and help the market, but there's a big player that's kind of weak. So hopefully this prep was helpful for everybody. Let's just do a quick recap on the main things. ES, already starting to give up the tighter trend line. Test the looser one. It could open down at the squeeze bottom below those trends. Basically, we'd need to see it fight back up quickly, but a continued rejection will send us back below 3,900. So let's see what we get and if it can hold. NQ. Just slipping down to VWAP, slightly outside of that trend line. Let's see if 12,000 can hold up NQ, or if we break below that and start heading back to revisit. Ready. That tight range with that daily 8, daily 15. See if it can stay above 1790. Get above 1810. IM. Right at that 31,400. So keep an eye on this, guys. Like each of these levels that I've called out, we are testing it. Should it start to give out now, our thesis maybe becomes a little easier that we are going to roll back. And this will be a choppy day with all these squeezes in place rather than a try to get going and recover day. And just a quick check on VIX. It's starting to peek into that zone. So need to see it reject, stay below the daily 8, get back below 29. For any upside, if it keeps on trucking, gets through the daily 8, we could see the market roll back over and VIX roll back up to this 33.52, 32. Hopefully this was helpful for everybody. Thanks for tuning in. If this is your first time checking out Predicted Trades, please come join our server. The doors are open. You can come start to learn our system before you sign up. Everyone have a great day. Good luck. Stay safe. It's Friday. It's OPEX. Don't think that you're going to get some crazy move today. And don't think that you're going to come in and fix if you're having a down week. Size down. It's OPEX Friday. Let's keep it cool. Let's have some fun, right? Good luck. See you in chat. And thanks for tuning in.